All over the world, there are universal models of running a business. A business, whether a service-oriented business, a merchandise, or manufacturing, are supposed to have production departments, marketing departments, and accounting departments. Those are the three key departments that a business must have. And these three departments are supposed to work hand in hand. But what do we find? We found out that just because somebody is skilled, is an expert in a certain area, he thinks he should set up a business, and he just starts his business. So maybe in the course of starting the business, he didn't bother, the person does not bother about the accounting aspect and in fact the marketing aspect. Well, something will compel him to be concerned about the marketing aspect because he has to sell the skill or the expertise. But he can easily forget about accounting, whereas it is the interaction of the production, the marketing, and the accounting systems that make a company to produce profits, that makes a company to move from startup to established business. Hello there, my name is Jeta Opopola and I work for Taisha Associates. In Taisha Associates, we help entrepreneurs and business owners like you to build and grow their business through accounting, taxation, company secretarial services, and all other allied areas of accounting. Today, I want us to talk about how to run your small business accounting. How to run your small business accounting. I want to share with you on this because most businesses always neglect this area of business. You find especially small businesses taking care of the production and the marketing but neglect accounting. So today, let's quickly run through 6 steps that you have to follow in having a good accounting for your business. Number 1, you need to set up your accounts. You need to set it up. And after setting it up, you need to determine the methods you want to use for your accounting. Is it going to be cash basis accounting or accrual accounting? I'm sure some people the term accrual might be strange to some people, but later on we will explain that. But you have to decide whether you want to use cash basis or accrual methods of accounting. Well, to give an insight, cash basis kind of accounting is always good for sole trader who does not normally buy their products on credit, and they too does not, and the company too does not give credit. And this brings us to accrual. Accrual method is when you incur, when you consummate a transaction, you book it. It is not payment. It is not when payments are made. Then another thing that you need to determine, do I want to use single entry method or double entry? Single entry is where you just write down the transaction, sale of so. And you don't want to know whether it is sale on cash or sale on credit. And however, single entry bookkeeping is good for cash basis method of accounting. The other is double entry, whereby every transaction is accounted for very well. And here there is what we call debit credit. You must have heard that term. It's a common term that accountants use. So in double entry, we use debit and credit. Then the third thing you need to do under this number one is for you to establish your accounting cycle. Your accounting cycle. You have to determine what time does it take you to produce and to bring money in. Well, this can be left to another episode too. Then lastly, in setting up your accounting is you have to determine your accounting year. Do you want it to be January to December, or you want to choose other months? You are free to do this. So the number one thing, remember, that you need to do is set up your accounts. Number two is you need to have what we call source documents. And source documents are useful in collecting, in documenting your business transactions. So you have to determine what are these documents, what are they going to be. For instance, in doing your sales, you need an invoice. In doing your purchases, you need a purchase order. In doing your expenses, you need a voucher. In paying to the bank, of course, you use payment deposit slip. So all these documents, they have to be in place because they are the evidence that you can hold for anyone, be it a taxman, that can show to them that actually you incur this transaction. And you know what? Even such documents are important to auditors. It could be tax auditors, it could be just a statutory auditors. Such document is important. You must have it in your business because that's the only way they can have evidence to support whatever transaction that takes place in your business. Number three, you need to record all company transactions. You need to record all company transactions, and you do this by using your financial information. You know, I told you in number 2 that you need source documents. Those source documents are to form the basis of your recording the company transactions. You need to post all sales into income. You need to post all sales to income accounts and all cash outflows to expenses. And in fact, you have to take care of your receivables and payables. They are very, very important. Your receivables are customers who buys from you on credit, and so you need to watch that it's a source of cash to you. And also you need to watch your payables. These are vendors, suppliers that have given you credit facility. You need to watch this so that you can maintain your integrity in the business cycle. So you need to record all your company transactions so that you can actually know for now. Number 4, you need to reconcile your internal accounts to external records. You need to reconcile your internal accounts to external records. What is meant by that is you need to see whether all those ones that you have source document for has really been put where they're supposed to be. And this has to be done on a regular basis. It's not just once in a while, no. If you have chosen to do it, to reconcile your books every week, you must do it consistently. You must do it consistently. You need to compare your records against the bank statements. You need to sit down and ensure that all payments that you made actually went through the bank statement. And you need to watch too that all the money you received, all the cash you received actually go into that, into the bank statement. You need to reconcile with that one. Well, the third type of reconciliation, this is when audit is carried out. You want to check that what the auditors confirmed to you that they saw was actually what they see. The reason why you need to do this is for you to ensure that your accounting system is working perfectly, is actually capturing all your business transactions. Number 5, you need to compile your financial statements on a regular basis, because you might need the support of lenders, investors, or even government authorities. So that's why you need to compile your financial statements. If you are incorporated entities, that is a limited liability company, you need the 3 principal financial statements, the 3 principal components of financial statement: statement of financial position, statement of comprehensive income and other incomes, cash flow statements. You need those 3 statements because these are statements that stakeholders are likely to use balance sheet. Create a statement of financial position, create an income statement and cash flow so as to aggregate to your accounting system and present it in a way that will facilitate strategic decision making. In doing this, you need to use an accounting system. You need to have accounting software. But I would suggest you subscribe to an online accounting software. In this case, it will make a lot of things easier for you, and you will not need to invest money in software at the beginning, because most online accounting software are always they are always subscribed for. And if you do this will help you to organize your accounts in a way that is presentable. Then lastly, number 6, compile your internal reports for yourself. Compile internal reports for yourself and your managers, and perform ratio analysis on your financial statements. This will enable you to gain insights into the performance of your business. It will make you to gain insight into the performance of your business. Examples include a report showing the trend of the ratio of debt to assets, and a report revealing which areas of operations cost is increasing, and of course calculating financial ratio on your income statement by comparing the performance in the previous month to this month, by comparing the performance in previous years, the month in the previous years to this current year. If you can follow all this, then you will have a very good accounting, and in fact it will help you in decision making. Well, I know that all this might be difficult for somebody who does not love numbers, somebody who does not want to have anything to do with figures. And that's why in Taisha Associates we offer services, outsourced accounting services, that we take care of your accounting, and we use a very, very good accounting software. So you can just sign up with us and we take care of that for you. However, if you have found this video very interesting, why don't you subscribe to our channel on YouTube and click that bell so that you can get notification of our videos anytime we put videos on YouTube. And if you are watching us on Facebook, why don't you just like our page? Until I come your way next time, my name is Jeta Owola. Stay tuned.